Good. Thank you. Good evening, everyone. For those who are listening to this webinar for the very first time, let me remind you that our past webinars have been well received. They found our webinars very valuable as we always focus on sharing real insights, real example, and some practical learning which can help you out for your future purchases. Now, we are in 2026. We have already seen a rate hike. We are also hearing about possible changes in the capital gains, negative gearing, and there are some global tension due to the war. With all these factors, there are some people who want to invest, but they're not sure where to invest. And this is a webinar which will help them out to understand where they can purchase. Remember, we are buyer's agent, and you are more than welcome to reach out to us if you feel you need a professional help. Dinesh, can you move to the next slide? That's a table of content which we're going to cover up. But before we begin, I want to share some housekeeping rules. Today's webinar is going to be recorded, and we will be sharing the recording link afterwards. Please be on mute when speakers are presenting or discussing. Question and answers will be at the end, but feel free to drop your questions in the chat box. Just a request, there will be some questions which might come up like this: what should I do in this particular scenario? We need to ensure that we are asking those questions which can help the wider audience, and let's stay aligned with the topic, not like what can be done in the commercial property or what can be done in the SMSF, right? For SMSF and other things, we have different webinars. All our webinars are being uploaded on the PropXpert website that can be reviewed. Just a high level note, we have received multiple questions during the registration. That's come to be as a surprise. The registration for this one is very high. It's close to 800. We will try our level best to answer these questions either by email or maybe by phone calls later on. But in case if we miss it out, please feel free to reach out to us. Let's move to the next screen. Let's start with some introduction of about our speakers. So there are 3 speakers for this particular webinar: Dinesh, myself, and 𝗿𝗍𝗍. I will do an introduction about myself. I'm one of the director of PropXpert. I'm also a buyer's agent. Many would know that I am also very active on social media. There's a Facebook group PFA norm, which is known as the PFA. Close to 68,000 members. It was founded in 2019. It was a baby was born over that time. It's been very helpful for many people. But as a buyer's agent and as an astute investor, where I have been investing since 2019, I understand client situations. I guide them with the right strategy so that we can help them to buy a property in an emerging market. That's pretty much about myself. Over to you, Dinesh, to introduce yourself.
Yeah, just a quick one for myself. I'm being in a property investing from last 6 years from scratch. I have 9 properties now in different states. I started my journey buying property in Melbourne, then I bought property in Perth, then few in Queensland. Then last year I bought 3 properties in Victoria. Now recently I bought 2 in Tasmania. So 9 properties over the last 6 years. And in currency space, I'm working from last 4 years. So I'm pretty good on looking into data, picking up markets bit before than others. So that's my forte. So that's what the focus of today's webinar is. So I'm going to discuss all those markets, which is looking great on data from bottom of the cycle markets to the market which has grown already. So we'll cover diverse markets here. So yeah, stay tuned for that. Next is 𝗍𝗍𝗍𝗍. 𝗍𝗍𝗍, you want to introduce yourselves?
Thank you, Dinesh. Hi, everyone. I am Zubair, and I have been working in IT and data space for around 2 decades. And I have led some teams, and I have led big projects as well. From last 3 years, I have been doing research and analysis on Australian property market. I have analyzed more than 3 million properties which are sold in Australian property market, and I understand which indicators are important to identify investment growth suburbs and investment type properties. So, and I will be helping, and I will be basically using our tool to help you to guide about this one later in the webinar. Thank you.
Thanks, Dinesh. The next one about PropXpert, I don't want to take too much time of it, but PropXpert, it was formerly called as Property for Financial Freedom. I feel proud to say it. It was being launched, it was been formed by Dinesh 4 years back. Myself and Dinesh, we collaborated in 2024, and at that point, we rebranded Property for Financial Freedom to PropXpert. Now, so far, we have bought properties close to 400. Most of our properties are always backed by the data, which means where we see there's a potential, where we see that the market is sitting at the bottom, we place the clients over there, right? So there are multiple clients who have been buying multiple properties through us, and some of the purchases is on the right-hand side of this particular screen. They are on a different price mark. Why is that? Every single investor is sitting at a different situation. Someone wants to invest 500, someone wants to invest 600, 700. So our role is to understand the situation. Based on the situation, we need to guide them out, right? So that's about PropXperts. Just a note over here. We are buying properties at this stage in Perth, regional Queensland, regional NSW, Victoria as in metro, Victoria as in regional, Tasmania as in whole, and some part of South Australia. So it all depends upon the client situation. If there's a need of diversification, we will help them to do the diversification, right? That's small thing about PropXperts. Let's move to the next screen. Disclaimer, that's very important. So full disclaimer is on the screen, but I would like to read the shorter version. This webinar is general in nature, and the information provided in this webinar does not constitute any financial, legal, property, taxation, or accounting advice. Any information shared in this webinar should be independently verified with a qualified professional.
Thank you.
Cool. This is a slide of a blog, but I want to, before I talk about the blog, I want to say something. I want to ask something. How many of us want to invest under 500K? Short answer would be many people, right? What I have observed and what we have observed, even the question which comes from the PFA, people talks about it. They want to invest with a lower budget, one, and they want to get a high yield. At this stage, what we can say it, there's a lot of mistake which is going to happen, because if you're chasing with the low budget and the high yield, things can go wrong. Let me show you one example. Dinesh, can you open the DSR, please? And enter the suburb called Kalgoorlie. Now, most of the people would have talked about there are certain data tools which help us to identify the markets. This is one of the tools called DSR. We use a lot. If we are totally relying on the data, now what does the data says about this suburb? We can see rate is very low. Typical value is less than 500, great. But at the same time, if you look on the gross rental yield, it's sitting as 8.8. Now, when we see a yield is too high, there should be alarm. What is the alarm? Is this particular town, suburb, is it doing something differently? Why this particular town is giving us a rental yield, high rental yield? This is one example. Can you open another example called Boulder? BOULDER. Same, WA, it's giving a rental yield about 8.8%, right? Another example, Emerald. EMERALD. Emerald is an exception case where the yield as of now is a little bit not too high as what we saw for Boulder and Kalgoorlie. It has gone down because property value has been shooted up over there, right? There's another one like 𝗿𝗏𝗽𝗆, which is South Australia. Now, key message in these suburbs, the yield is high. What we need to figure out why this yield is high. Now, when we were in the school age, we always been taught like high the risk, high the reward. Over here, we are seeing the reward is high, but we forgot about to consider what is the risk. The risk in this town is that they are dependent on single industry. The single industry can be either a manufacturing industry, can be agriculture, or they are mining towns, right? So these markets are a little bit risky. They are not suitable for every single investor. So my tip is that don't fall into a trap where other people are saying, hey, let's buy under 500K because this is giving us a great yield. Their appetite, their risk appetite might be different. So what suits them may not suit you guys, right? I have given an example of 4 particular suburbs over here, but there are many other towns which fall into this category. And that was a reference. We have written a detailed blog. The blog is pinned on our PropXpert website. It's very easy. We can navigate to under the blogs. We have written many, many blogs. I would strongly suggest you to go through it. You will love it. For specifically for this one is the number 2 on the second screen. Can you click on Dinesh for this one? Scroll down a little bit. There are multiple towns which has been listed, which will fall under this particular category. My strong recommendation would be, please bookmark this link as it can help you out to take a decision. If the market is sitting at a lower price, giving us a yield, come back to this particular link, verify if that particular town is over here. It will help you out, right? Now, this is one set of market which are dependent on single industry, but they are another set of market where we can still buy under 500, but the quality of the asset will be a little bit poor, right? Suburbs or towns like Burnley, which is in Tasmania. Dinesh will cover up it later, but I'm just giving an example over there, right? Now, these are the markets which are risky, but at the same time, there are many people who want to invest with a low budget, and when they are not able to do it, then what are the options? The option is they can still think about to invest in a unit, but we need to be very careful when we have to invest in unit. Why? If we are thinking about to invest in a unit where a freestanding house is out of reach, yes, we can think about it. But in case where freestanding houses is still in reach, and that particular suburbs, towns, the growth will be a little bit, will not be too much. For example, people who are in Victoria, who are in Melbourne, just for example, if I say suburbs like Tarnate, Donnybrook, and if you look on the unit price, it will be okay, but in terms of the growth, no, not too much. But if I look on the other suburbs like Doncaster, Preston, if you try to find a particular house, the prices will be in a million, whereas in the unit, that will be in the affordable range, right? So these are the markets where we can still explore. As a prop expert, we are doing an extensive research on the back end so that we can help you out in future in terms of which are the suburbs where if we want to buy a unit, that suburbs can be helpful for us, right? So that's pretty much I want to cover up. Ganesh, can you go back to the slide?
Yeah, so before I go back to slide, very good point. It's not like we are not touching those small towns. Just an example, we bought properties in Emerald in a very good time, and it has performed crazy. So if you go in last 2 years, so properties in Emerald, Emerald in Queensland, properties in Emerald has grown like 50%. So it's grown like that. So 400 market become 580 there. If you know your risk appetite, you know what you're investing. Emerald was mining town, but it has big agriculture hub as well. So we consider all those factors, inform the clients, bought properties, and the results which we come up with. For example, we bought this property for a client, 11 Onyx. This property was bought for 410, right? In 2025. So January 2025, it's just a 1 year. And similar property, just identical, same, I think it's the same builder, same house. If you navigate the photos of both properties, it's exactly same. So this property next door sold for 535. So it's a 125K gain in literally a year, right, from the base. So which is like 30%, 25-30% growth in a year, right? And the rental yield was like 6%, 6.5% that time, right? So if you know in and out your entry points and exit points, these markets can be considered, but yes, with all the disclaimers coming with that, right? So we'll cover some diverse economies markets as well. So I'll take it from here. Thank you, Manish bro. So I'll share my screen again. A presentation mode. So yeah, so what I'm going to discuss, right? So it's going to be very fast paced because there's a few markets to discuss. I'm going to the how the order of these all markets. Taz I see as a more bottom of the cycle market. Then Victoria bottom was last year. We have bought few properties here which has grown like 100, 120, 130 within a year. So I've covered that Victoria, in New South Wales, some markets like Albury, Wagga Wagga, they are the very strong markets as per the data. They are growing very well, but not a bottom of the cycle again. So bottom, I would say 2 years ago. In Queensland, we bought like 100 properties there from Gladstone, Rockhampton, Mackay, Cairns, Townsville. In all of that, I have already a property in Mackay and Cairns, which I bought in a very good time, literally at the bottom of the cycle. I'm going to explain these market has grown from their base, but still can be a good options to invest. I will just show some properties in there. WA, I have property in WA in Port Kennedy, which has grown double in value in last 4 years. I think 110, 120% growth in last 4 years. But there are markets like Geraldton, Bunbury, they both all these markets has grown, but there's still opportunities. If the idea is to diverse the portfolio, there are some good things like Bunbury, the household income is still very, very strong, even though the prices has grown. So there can be an opportunities looking into those markets. In SA, again, same story, not a bottom of the cycle markets, has grown pretty well. But there are markets like Mount Gambier, 𝗿𝗏𝗽𝗏 we are recently buying for some reasons, which I will discuss later in the webinar, why we are considering 𝗿𝗏 as an investment opportunities as well. And some parts of Adelaide, you can still get that properties around 750. But yeah, not a bottom cycle market. So this is how I'm gonna cover. So let's start with the Google Maps here. So we are talking more Tasmania first. Me and Manish bro have done the tour, the whole Tasmania tour in end of December and January. We have done a lot of videos on the ground in the front of properties. Please go to our PropXperts Facebook page. You find all those videos if you want to watch. But yeah, so why we are first investing in this one? These markets are bottom of the cycle. The market was growing a lot in 2018-19, then wasn't performing well. In last 4-5 years, 6 years, hasn't done much. But last few months is going crazy at the moment. Every property start attracting 10, 20, 30 offers. So it shows a strength. The reason behind that is the regions have a lot of projects happening around. For example, if you talk about Burnie, there is a power link between Victoria and Burnie. We have covered that whole topic in our Tasmania webinar as well. So this power links, a multi-billion-dollar project connecting Victoria and Burnie as a power. There's a bit of infrastructure going to happen here. Other projects like Devonport, Spirit of Tasmania getting upgraded. So multiple things happening in here, which you can watch that webinar. But I'm going to show you properties which we can secure. So Burnie, let's start with the Devonport here. So Devonport is one of the major hubs there. If you talk about Devonport, we bought a third property for our client. This one, good block size, decent house. So these properties are going more like was going 550, now touching 600, 610. So big block of land. East Devonport, the good thing is it's very close to where Spirit of Tasmania stops, very central, but some pockets are a bit of low socioeconomic. So if you're aware of that, if you're happy with that, East Devonport can be a good option. But if you go suburbs like 𝗿𝗏𝗽𝗏, that's again, if I zoom in here, so I'm talking about East Devonport. Now I'm talking about 𝗿𝗏𝗽𝗏. So 𝗿𝗏𝗽𝗏, we are buying properties. The stock is extremely low in 𝗿𝗏𝗽𝗏. I was looking, we bought this property in December last year. Since then, only 2 or 3 properties sold in the whole suburb. So stock is extremely low. Rarely a property comes to the market, but when it comes, it goes crazy. This property had 20 plus offers when we bought this property. So this 615 property, bit of maintenance work going on, like they have to repair the roof and all, but still 311s in here is more like 630, 640. 322s are more going 670, 680. But the rentals, they're getting somewhere around $630 to $650 per week in here. So properties like that can be a good option, right? So that's more in Devonport. If you go a bit further from Devonport, here is Burnie. That's where there's few more pockets like Ulverstone, Penguin. They are okay to buy, but I would prefer to go in a major hubs like Devonport and Burnie. Ulverstone is still big, but yeah, you need to be a little selective on picking up a property here. But talking about Burnie, I bought a property here in suburb called Montallo. That property is this one. Again, a decent 1,000-meter block. I have planned to put a granny flat at the back and put it on an Airbnb down the line. But decent property. I bought this property for 480 only. Right? Old one, I'm spending $30,000-$40,000 to repair the whole house, but the rental price will coming to 520 to 550 after I repair. So 480, I'm spending $30,000. Say 510, say 520, still getting a $500 to $550 per week rent. Is yield is around 5.3, 5.4% there, right? If you get the good ones, right? So 5% you can target, good water views, good. It's for a tourist, it's a big factor is the tourism. It's a beautiful pocket. When me and Manish, we inspected me and Manish this property. How do you feel about Burnie, Manish, when you was there?
See, when we traveled to the Burnie, the views were really, really awesome. I really love that area. Given that particular property are selling under 500, because nowadays in Australia it's too hard to find properties under 500, right?
Yes.
Water views, great views, good potential, and if you have already covered up the rental yield, when all these things are ticking up, we might consider to really buy over there if we got a small budget.
And another one, we just secured a property, this suburb Acton, coming up good on multiple platforms. data platforms. One thing why 𝗿𝗲𝗽𝗍𝗍 is here, we are developing an in-house tool which is PropXtrends, which is gonna give the glimpse in the end. So it's that suburb is coming on our tool as well, and all other tools. Acton started popping up on the data. So we bought like this property very recently, like 4th of March to the 10th of March. It's gone on condition like 6-7 days ago. 900-meter block, decent house, and in the house you have water views from this as well, right? You're buying a 500K property. I feel that you can't go wrong with the properties like that. So it's a old ones. Again, newish one in same price range. You have to go in a mining towns like Emerald, right? The old ones in 500, you can find properties like market like that. So that's a 500 range in Tasmania. Now this is
Dinesh, just to add on for the actor, there was a particular news came up on the real estate of the 100 hotspot, maybe 100 or maybe I don't know what the number was as a hotspot, and Acton was one of them.
Yes. So the Tasmanian, most of the suburbs started popping up on the data because the issue with the Tasmania was they haven't built enough houses in last 1-2 years. That adds a supply constraint, and now the supply is short. So rentals are going pretty fast, properties are selling very fast. So these are the reasons why the market is doing pretty good. Another one, which is one of my favorites, is Launceston. I really like it. I find out it's not Launceston when I was there. So Launceston, very good. Multiple projects. Again, we covered this market when we did a Tasmania webinar. But if you go Prospect Vale, if you go Summer Hill, there are few good suburbs in there, but there are some pockets in the outskirts, which is Perth and Longford as well. So we were in buying, I'll show you that suburb, as we were buying in Gracemere in Rockhampton, which was like 20 minutes away from Rockhampton city, right? But that has done pretty well because you find a new that's a good community, no flood zoning issues. So that has done pretty well. That's the same feeling I have for Perth and Longford on a data that is popping up very strong. So Perth and Longford can be a good options. But we have a video in a suburb called 𝗿𝗏𝗽𝗍𝗍𝗏. 𝗿𝗏𝗽𝗍𝗍𝗏 is very good suburb as well. Anything you want to share about Launceston, about trip, Amnish bro?
Say, if you have been visiting, if you have visited particular Tasmania, if you have gone to Syria, I would say don't miss out for the traveling. Traveling, the suburb is all on the hill. It's an older suburb, but the view, water views, awesome. The properties, when we see it and we look it from inside, amazing, right?
Yes.
The stock is low, but as soon as the property gets in, it gets snapped away, right? So I think we did a video for one of the property which we couldn't purchase it. We lost it, but that property was really great. It should not have been missed out.
Yes. Right. Awesome. So this is some of the all of these properties is 70-80% are purchases, but some I have took for a references as well. So it's not all of us are purchases, but I'm giving you good examples in few markets, right? But this one is one of our purchases. Again, a repeating Clyde bought first property in Mackay for them, Manish bro, and that grown like a 120-130K. Then in a year, then he came back and we bought this property again. You're buying these properties around 700K mark here, right? Again, you can be lucky, you can get some views and stuff from the properties. So good part is the rentals. So 700K purchase, you're getting like 650 to 680 rental. So rental is like 4.7, 4.8% in Launceston. So yeah, properties like that. We recently bought, this was 322. We bought Summer Hill, one of the good suburbs again. The property need bit of carpet change and stuff, but we bought this property 422 under 700K mark, 697, and it's again gonna rent somewhere around 650 mark. Very strong on data. These markets are pretty good. Just an example for the Perth and Longford as well. So this property here was bought in Perth. That's not Perth in WA, that's Perth in Tasmania, right? People get confused. So Perth in Tasmania, these properties, like we missed out these, we placed an offer, we missed out. So you're getting still like 650, 660, 670 properties in Perth. In this one, we missed out as well. Good block sizes, decent houses like that. Right, so that is again Launceston. Now let's go. So where we are buying Devonport, Burnie, Launceston. The next is Hobart. Hobart is our battleground at the moment. So I would say 50 to 60% of the whole purchase we are doing at the moment are more focusing on Hobart. But again, we are buying in many markets. Hobart, why we are focusing, one is the bottom of the cycle market, stock is very low, um, like growing like a $10,000 to $15,000 a month, most of the properties, right? Now it's a situation when we started buying like 4 months ago, no one was asking, like properties are sitting there for 2, 3, 4 weeks. Now nothing, any good property is not sitting more than a week, unless a client like the seller want to wait for 2 weeks to see more offers, they are selling very quick, right? If the properties are good. I again covered this whole Hobart in the Tasmania webinar. Here, I'm going to give you a bit of examples on the price range properties. So where we are here. So this property we bought for a client, that's our fourth purchase. I got a message yesterday that for the first property I bought for him was in Waikiki. That property we bought for 535. The valuation came 980. So grown like 450K, and that's how the suburb has gone. Then we bought few properties. The second property we bought in Gracemere, third property we bought in Ballarat for him. Fourth property was this one, right? So this is how the suburb has grown in last 3-4 years, right? So it was a like 500K suburb. So it's grown like 500K to where it's sitting around 880 now, right? Coming back to the property here, Glenorchy, again, this, if your budget is around 600K mark, you're gonna get bigger block sizes, but older houses, right? You can get 600, 620, 630, 640. So like Glenorchy, suburb like Rokeby, there are multiple options there. Prices are growing fast, but competitive, but like you get these decent block sizes. You can get some good renovated properties around 620, 630 is where we are buying heaps of properties. So this is one, again, again repeating client property. That's a Rokeby. Rokeby is one of the good suburbs on data. Again, a bit of low socioeconomics in some pockets, but the older ones are growing pretty good as well. So 599, we bought this property, 600 block size. Again, a bit of renovated property inside, right? So these properties around 600, the yield gonna sit somewhere around 4.5% for them. These 600K properties are renting more like a $550 per week. 610, 620 purchase, 550 per week rental, around 4.5% rental yield. So yield, your price point gonna keep going up in there, and the rent's gonna go in the same ratio. The yield gonna be almost same. Why I'm saying that, for example, you're buying 600K older ones, now you're turning it to the newish ones. Again, this is one of 705K property, decent house. This will rent somewhere around $630 to $640 per week. So yield is same, even though the prices has moved, yield is same. So in there, this is a suburb where I personally bought a property recently, which is about to settle. Again, they're hot cake, going pretty good. So something like the 600 is the older ones, 700 you get a newish ones. Generally, the typical bedrooms are there, 3 bedroom. There's very less trend for the 4 bedrooms there. So 3 bedrooms are most popular. 3-2 will vary the price. So if I go to my property, so this one 3-1 Chigwell, one of the good suburbs of market purchase, again, very decent one for 701, right? And if you go next here, that's 3-2. Whenever the 3-2, you're gonna pay 30, 40, $50,000 more for 3-2 properties. Again, newish one. Good thing with this property, Sorel, one of the suburbs where we did a lot of content when we were there. What do you feel about Sorel, Manish bro, when I was there?
See, Sorel is one of the suburb which, when we're coming from the St. Helens part, that's a suburb which came up first. So that's an entry point toward the Hobart, not too far from the airport. The suburb has a great wide. It's been like one side is on the other side, one part of houses on the other side, the other side as well. The property prices over there, which is selling around 720 to 740, for example, they are also fetching the rent around 700 to 720, right?
Yes.
So if the property is fetching an equal rent, that's going to be great as per your investment portfolio, right?
Yeah.
So something which not to be missed out. Only thing is property prices are growing at a rapid pace. So we
They're
need to
going
take an
fast.
action. We need to take an immediate action for it.
Yeah. So for example, if you go, we bought this property in December in 720. I can literally bet you it's very hard to buy anything similar for 740 now, right? So it's already has grown the rental around $700 per week. So this is how this Sorel and suburbs are going. Next suburb, this is where I bought a property. I bought for 745 this property. This property had a water views. So I'm planning to run an Airbnb on this. It's settling hopefully in few days. So once it's settled, me and my wife going there to set up a Airbnb. So we're gonna run the Airbnb on this one. So that's in Hobart. Yeah. So that is pretty much in Tasmania, right? Now we're gonna go in different states. So we'll try to
Dinesh,
cover as much as possible. Yes,
then I
yes,
just want to pause you one minute just for the people who are listening over here. Why these particular examples are being shared? When you can see the recording, you can see the name of the suburb and the property purchases what we have done so far. That will also give you an example where the particular market is moving, what particular range we can buy it, whether it's an established property, older property, or new property. Right? So that will give you a good insight in terms of the range of the properties with the suburbs as well. So everything will be there. You can go back into the recording and have a look.
And also, I have to little bit ramp up from here. Like I know the speed because I'm going to cover like 5 states. So this is Hobart. Going to be little fast. Again, refer to our videos recording in the later on if you want to. But yeah, that's pretty much in Hobart. We're buying in Burnie, Devonport, and Hobart like this Tasmania. Now, next market I want to discuss is Victoria, where it was a ground for us last year. We bought around 120, 130 properties in Victoria in say 25 and up to now, like literally 100 plus properties in here. What are the regional hubs in Victoria? Very first one I want to talk is um, this Bendigo, right? Bendigo was the first one in regional hubs who started moving before the Ballarat. So Ballarat, if you know, has grown like 100 and 120K, 20-25% just last 1 year. But before that, it was Bendigo who started moving before that. What are my favorite suburbs in Bendigo still is like Eagle Hawk. You have Jackass Flat, Kangaroo Flat. So properties in there are more like let me go in here say so properties like that, Kangaroo Flat, this is not our purchase, I'm just putting it as a reference. So good block sizes, you can still get a 700K each properties here. The renters are pretty strong. These properties can rent somewhere around $620 to $630 per week. So around 4.3, 4.4% rentals in Bendigo. You any niche property started trending around 700, 720. Eagle Hawk, one of my favorite suburbs, properties like that. Now, next property like that's the market in Ballarat. So Ballarat, that's where we entered very early when no one was buying properties. We were there buying properties. So we were buying, our favorite suburb was Alfredton. There was multiple reasons. It's come in a Ballarat high school zoning. Um, the suburb was fully packed. The data was good. So that property we were buying like a 550-ish range, 520, 530 range. They're like 650 now, 100K up. What I would still is I was looking the list of cities as per the population. So if you see, Ballarat sits in top 20 cities in a population. So only 20 cities in Australia which are over 100K population, and Ballarat is one of them. I would still say Ballarat is one of the cheapest market where the population is 100K plus. You can still get the properties here around 620, 630 mark. You're buying heaps in Alfredton, the adjoining suburbs, Westerpool, Delacombe. There's multiple suburbs we are targeting there. So it's still a good market, in my opinion. The only challenge with the Ballarat is the rent growth is not that high at the moment. The vacancy rate is still sitting around 2%. So 550, we were getting $500 per week rent. So yield was pretty good. Now the price has gone to 650, rent grown to 5 to 510, 500. So $10-20 rental increase, but the price has moved in that market. So me and Manish again toured the Ballarat, met a lot of property managers there. Manish, you want to share anything quickly on Ballarat?
See, Ballarat is a town which has a very good school. A lot of people from the western side of Melbourne, they move to Ballarat as well just for the higher studies for the kids. Right? So that also creates a demand. Second, it's a tourist place. People come over there. They also look for the Airbnb. Right? The
Yes.
land supply was there, but slowly, land supply is getting absorbed. Now it's getting into the shape where for an investor, if you have a budget around 600, it can be an entry point with a disclaimer, the rental will be low.
Yeah, it is low, right? So that's Shepton. So we were buying properties like, as I said, a lot of off markets. We bought like 40, 50 properties in a good time there. So like now these properties are going 630, 640. Back in the days, it was more like 550, right? So that's another Winter Valley. I really see a good, like, because it's just next to Alphaton. Now, how you overcome with the rental yield? Winter Valley is still good. The supply is little high on Winter Valley, but you get a bit cheaper. Like you get a same rent as Alphaton, almost same, but the price is like 40, 50,000 cheaper. So Winter Valley can be a good option in Belrite to look into. So that's Belrite. Now moving into Geelong. So we haven't bought much properties in Geelong. We are looking into that. The reason why we were not buying in Geelong was the prices was almost same for Melbourne. Then we thought like, why not Melbourne? Why we are going Geelong? But Geelong's data suburbs like Grovedale, really, it's lining up perfectly, right? If I go Grovedale, literally, hasn't grown much, but all other parameters are aligning. The good thing is stock vacancy is extremely low. Other problem is the rental rate, 3.75, but you are getting around 4% in some properties. All right, so the properties like these ones, like they can be ideal purchases in here. Properties like these ones, Highton, another good suburb. It's not cheap than Melbourne, but a good markets to look into as per the data, right? So that's Geelong. Next, I would like to talk about Shepparton. We bought heaps of, not heaps, like 10 to 15 properties in Shepparton. The reason being is in Victoria, I feel Shepparton is where you get the best rental yields with more diverse economy. So Shepparton sitting around for 70,000 population, you can get cheaper houses in 400K. This client bought 9 properties with us. It's one of his purchases here. So this property we bought literally for 430K, and it's renting for I think 450, $460. So you're getting a 5.5% rental yield. Old assets you can literally get under 500K or around 500K mark, right? So that is one example in Shepparton. So you get a decent house is Kala. I really, locals love Kala because it's a beautiful suburb. We bought this off market property literally at 672, renting around 690 or $700 per week. So rental yields are very strong in here. Newish houses like that. One another area which I really like there, Mrupuna, we bought this property off market recently, around 636, 46, 50 mark, you're getting properties like that in Mrupuna. Newish properties, you're getting 670, 680 in Mrupuna at the moment. So I really see this as a good market in Shepparton. So this is major hubs, which I covered: Shepparton, Geelong, Ballarat, Bendigo. Now coming to the metro city, I see still Melbourne as a bargains where your Adelaide, Brisbane, everything is around 900K mark, right? Melbourne, still you're getting some decent properties around 750 mark. Again, the caveat here, the vacancy rate is still sitting around 2%, right? Even though the market is very cheap, the rentals are not gonna grow very, very fast, right? But the price growth, because it is now the market moves with the two. One is investors, one is the owner occupiers. So in the owner occupier space, Melbourne started getting highlight because people in Adelaide, Brisbane who can't afford properties there anymore. I know a lot of people who plans to move Melbourne or moving to Melbourne now, right? Just because it's cheap, right? You can get properties like brand new properties if you compromise a bit of land size. This property was bought like 350-ish land size, under 700K in Sunbury, brand new property. So you can get like a good like 580 to $600 rent in here. But on a bigger block sizes, like this is another off-market purchase in Craigieburn. I have a property in a same street in Craigieburn. I have a 51 stream side. This is 70 stream side. So this property bought for 730, 35, something like that. So Craigieburn, these markets in capital cities still offering you 750-ish price tags. In here, rentals around $600, $620 per week. Where we are investing in Melbourne, I think we did a webinar on that anyways, but I'll just give you on a north side: Craigieburn, Epping, Marinda, Doreen, Sunbury. We still the bit of land supply around the outskirts, but it has big project pipelines, very, very decent suburb. We are still buying in here. West, we are very particular: Point Cook, some little bit of Hopper Crossing and Werribee, and a southeast, we are more in a Cranbourne pockets. Again, these pockets I'm just looking into up to 750 mark. There are a few other markets which are a little expensive. I'm just explaining you markets within our price range, which is the agenda of today's webinar, right? That's the property in Cranbourne. We recently bought literally under 700K. It's kind of a reno project where we are changing carpets, painting the house. Like literally bought 700K, 650. Now houses like that, if you go and buy land in Craigieburn, 650 land size, you're gonna pay almost that amount, 700K, right? So you're literally getting house for no money. Basically, it's a free on the top, right? Anyone want to share anything want to share, Manish Bro, on this?
For me, if we are talking about Victoria and Melbourne, my only tip would be if we are taking a dart and throwing them on the map of Melbourne, and if it lands there, and if you're thinking to buy over there, please don't do that mistake, right?
Yes.
For Melbourne, for Victoria, we need to be really, really careful in terms of what suburbs we need to buy, right? So everything has to be data driven. We need to understand the fundamentals. They are not one, they will be multiple. Based on that, we need to take a decision whether the suburb can offer us a property under 750, under 650. 550, 650 will be too hard to buy within Melbourne. Yes, but as Dinesh mentioned, in regional Victoria, we can still go over there.
Right. So that was bottom of the cycle markets or early in the cycle markets. Now I quickly run down with you on other states. So next in my list is looking into regional New South Wales. Regional New South Wales, if I look into here, where we are investing in New South Wales is so very interesting, very good market, I would say, starting from Albury, right? So Albury is literally in between New Victoria and New South Wales. Very good. Very good. Like it's a big agriculture hub, trucking industry there, tourism, because a lot of people stop here when they go to Sydney by drive. So Albury, we were buying properties in the past. It's one of the very strong markets in my opinion. Again, it has grown in last 1-2 years. I would say from the base 150K growth already happened, but still suburbs like Leamington, Glenroy, 𝗿𝗏𝗼𝗀, they're very, very good. Even the inner pockets, you're gonna get the old properties in the inner pockets. In East Albury, for example, they're very good on data. So just an example in here, that's one of our off-market purchase. You're getting old ones around 600K mark. So you can't get a newish one. Any newish property is gonna touch 750 now in the market. So 322s are more like that was 600K purchase, around 600. The 322s, 𝗿𝗏𝗼𝗆, one of the very good suburbs, good land size. You're getting around 670 mark in here. Again, decent house. Now talking about next is 𝗿𝗏𝗼𝗆 again. Any newish. Now this is a new property. Even 322 gone for 765. Right, so you're talking you can get a newish in Glenroy, Leamington, 𝗿𝗏𝗼𝗆, mainly 𝗿𝗏𝗼𝗆 because that suburb is developing at the moment. So you're getting a decent houses here around that mark. Other markets which I really want to cover is if you have Albury. Now next is what we have here is Wagga Wagga. So Wagga Wagga, New South Wales. So Wagga Wagga has a same story. Like most of the regional New South Wales have a same story. They have done pretty good in last few years, couple of years. So there are good properties there. Just want to recap. Go here. So like Dubbo is another market. Wagga Wagga is another market. So that's property in Wagga Wagga, right? Same, the older properties you're gonna get. I would generally avoid. First, this property was reference. It's not our purchase. Old properties avoid swimming pool because that can attract bit of maintenance. We try to avoid that unless we're getting a very good price. But yeah, around 650 you're getting in Wagga Wagga. And if you go Dubbo, same story, but newish properties. This property we bought for a client. We bought 3 properties in 3 months for this client, and 1 property was in Dubbo. That property literally we bought for 687, big block 422. Now same property, you're gonna pay around 750 mark in there, right? So this property was bought for 680, but Dubbo can be a good market in here. Apart from that, Tamworth. So Tamworth again, we were buying like literally 4 years ago. And when I started the business, I think first 10 purchases, one of them was Tamworth, but it has grown and then stopped there. It is showing us good fundamentals now again. In last one year, it has started going up. You can get still a 600 under 600. One thing is inner pockets of Tamworth. So when you look into Tamworth in here, inner pockets of Tamworth are bit of rough. So you need to look into social housings around here. So Tamworth, again, pretty decent town. So markets like South Tamworth, West Tamworth, Tamworth, North Tamworth, check the social housing around before you buy the property. But if you go suburbs like 𝗿𝗲𝗽𝗆, they are my favorite. So it's a very, very good suburb. You can get properties in 𝗿𝗲𝗽𝗆 still like that. So 422s around under 700K. This can be the ideal purchases in my opinion. Right. That's that. Now next is we are going to now Queensland, where we were buying in Queensland is this the coastal belt. I'll go here. So in Queensland, we bought heaps of properties. It's not early in a cycle. Any market like Glen Eden, just an example. Glen Eden. You need to be very careful picking up gems now, because how Manish bro has said, in the past you was buying whatever suburb it was growing there in regional Queensland, especially market like Glen Eden, uh, Auckland, something like that. New Auckland, they are pretty good suburbs, and they have shown like properties we bought. We entered the market when the market was around 400K, like 2 years ago. Like here, that's where we entered. Now the market sits somewhere around 626, right? Same happens in market like Gracemere. I'll show you all the properties in a one go. That's a Rockhampton suburb. So again, we entered market, we bought heaps of properties around 400, 420, 430. But now the market sits around 700K there, right? That's Gracemere. I'll show both of these properties in a go. So the Glen Eden, you can still find properties around 620, 30, 40K, decent 422 houses. That is the Gladstone. Next is your Rockhampton, right? Under 700K, you can still find the properties, but only thing is you're a little late on cycle. If you are looking long-term SMSF purchase, 10 years span, markets like that can be considered. So Gracemere, another under 700K. Next market is Blackspeed. That's where I bought a property. The rental yield still you can get around 5% there. 535 purchase, 600 block size. This property, I think, how much rent we got on this one, Manish bro? I think 780.
Correct.
So
Seven.
you get beach properties like that in Mackay around 750, 60 mark now, and they're renting for 750. When we entered, this suburb was sitting at 500. So Black Speech. So it's not a bottom of the cycle again. So it's grown like a 200K. It's grown like that. We entered in here when the market was literally flat, but it's still giving you 5% yield, good rental yield market, right? So market properties like that can be considered. Quickly, we'll go through two more things like Bentley Park. I bought a property there for 420. One of the Keynes suburb, very good markets like suburbs like Bentley Park, Mount Sheridan, this pocket in here. If you go in here, we covered Gladstone, right? And then we bought properties in Rockhampton area called Gracemere. You can still look into there and go up a little bit. And Mackay, we bought heaps of properties in northern beaches. So it was like Rural V, Black Beach. Again, you're not only the majority of the growth has happened, but if your span is like long term, market like Black Beach, Phuketia, we bought heaps of properties there. You can still get a 5% rental yield here. But next, I bought property myself in 2022 in suburb called in Keynes in Bentley Park, right? So suburbs like Bentley Park, Edmonton, Mount Sheridan, they're very strong. So you can get properties there around 750 again. The renting around $720 to $750 per week. So rentals are very strong in here. And Townsville, the problem, I generally I'm not looking Townsville much, but we were buying properties in Kirwan, Condon, all these Burdle, Mount Low, these has done like 200 to 300K growth, but you will still get the opportunities. The problem here is the rental yield has dropped down. When we were buying properties there, 400K, renting for $450 per week. So rental is around 5.5%. And now that 450 property becomes 650 property. Rental grown like 30, 40, $50 from there. So yield gone to 4.5, 4.6. The problem there is the council rates and insurance are still high. So cash flow doesn't stacks up really well, right? But still you can look into, if you really want to get one, the data is still strong, the supply is still low, so you can look into that market. So that was more Queensland. Brisbane, I tried my best to find anything under 750. It has really gone up. We bought properties here around 900K mark, 850, 800K mark now. But it's not a agenda of today topic, so I'm not covering that. The last state is what we are not covering Northern Territory much, right? So Northern Territory, literally, the reason in Darwin, you get a high price points at the moment, and it's not that diverse. So like if you're going in a risky market, we prefer a lower budget, like 450 to 500, 550 as max. When you're going 750 price tags, I generally don't recommend like going into Darwin. So that's the reason we are not touching NT. Now, looking into, I think we still have to cover Perth, right? So
Yes.
Manish bro, what do you think on the time side? So it's 7:25 already.
I think just do a rapid pace for the Perth because we need
Okay, so
to.
I'm not going to show examples. I just talk on the market, and then we'll wrap it there, right? Then I'll pass on to you, Zubir. I should give a quick rundown on what we're doing on a PropXtrends. So Perth. So we bought heaps of properties in south of the Perth, like Port Kennedy, 𝗿𝗍𝗍. These markets have reached 850 to 900, but you can still get properties in suburbs like Leda or Bertram. So I've pulled out some examples, but I can't show you now. But things are like Leda, Parmelia, Bertram, Medina. You can get some pockets here. Thornley. What do you think about Thornley in there? Can you get a stock in 750 mark now?
No, it's very difficult now
Very
because
difficult,
it
right?
has grown significantly.
Yeah, so you may get some, but again, this has more than 100K growth. What other markets where I was looking was Bunbury. I really like suburb called Australind, right? Australind is one of the suburbs in Bunbury. So there I can still see property, some of the properties going around 750 mark, 700 mark. It has grown, but the good thing is in WA, the average household income is still so good that they can afford the expensive houses as well. So the Bunbury is supported by a lot of minings. If you go a little bit away from Bunbury, within an hour, 1.5 hour drive, it's a bit of minings around this region, right? So the salaries for the people here is very high. So that's Australind. Again, these kind of suburbs can be a good option. Where few other options are Giraldon. We generally didn't bought much properties there, but still you can get under 700K. Data is still strong there. But for me, it's a bit more remote for WA. Similar way, you have Albany down there. Albany in here. That market can be under 700K, but yeah, it has done like its job, and like bit of risky market, like a mining town, how Manish Bro has explained before, right? That was Perth and SA. Again, you can still see some opportunities in northern fresh in northern Adelaide in markets like Salisbury, Paraloy, suburbs like that. So they can be option here, right? If you go there, most of the 422s, if you go in Adelaide, they're around 900K mark now. So they have grown quite a bit. But if you go here, now it's coming up. Yeah, so Salisbury, uh, Elizabeth is a bit rough. I generally don't recommend going Elizabeth, but Salisbury North, Craigmore, Paraloy, you can get either small blocks, a newish house there, or the old properties with a big block size. So Adelaide still you can see some options in there, but it has grown crazy. Most of the cells, like the only challenge with uh SA suburbs, so it has grown like that. So it has grown pretty much 3 to 400K, like 500K market becomes like 816. The market cycle timing goes to very low. It's literally alarm that the market is grown too much. It might correct from there, right? So that's something you have to keep an eye when looking to Adelaide markets. But where we recently bought properties was area called 𝗿𝗏. 𝗿𝗏 is a small market in here. This one. The reason behind buying in 𝗿𝗏, again, it's a risky market. It's not for everyone. So it is because there was a steelworks industry here, which gone like the owner gone bankrupt, and the whole industry gone into the administration, and government took like SA government and the Australian government came together and introduced 𝗿𝗏 $2.3 billion package. Billion in 𝗿𝗏. If you search Google that, you'll find that article in there. So it's $2.4 billion coming to 𝗿𝗏. So it's a bit of money for 𝗿𝗏 to see. So it's a 𝗿𝗏 2.4 billion plan to secure 𝗿𝗏 future. So when we entered there, literally no competition. Now some properties started going in auction. So we see that strength coming in there. So literally you can get niche properties there. Like if I go one example just to show you how the property gonna look like there. So where is that? So like properties like that, good land size, decent houses, you can get like 450 to 500K range. We bought properties there literally at 300K. The older ones are you can get like 310, 320, and they can rent for $300 per week as well, right? So this is pretty much the whole rundown to give on the market. Zubair, over to you if you want to quickly share the PropX trends, and then we can take our questions.
Yes. Can you please enable share for me? Yeah,
Yes.
wonderful. Can you see my screen?
Yes, we can see the screen.
Wonderful. So, hi everyone again. So the first question is why we are building this tool. The reason is because no other tool that is available in the market provides us the flexibility and all the data points that we need. So because we need to find the areas with demand and supply imbalance. So whenever we find those areas, that will automatically grow. And with the help of this tool, we can easily go from the state to LGA and suburb and to the property level. So we can quickly jump from state to the property and identify the potential areas and growth areas. So I will quickly go through the this tool. So the first we have state analysis. In state analysis, we can see the demand and supply trends. Currently, I have selected WA. So for example, in WA, you see even after 2025, we can still see the listings for sellings are dropping. Okay, and the rental listings are not growing. So the rental pressure is still there and the listings are dropping. So it means the demand pressure is increasing. And you can see home buyers per home ratio is continuously increasing. On the other hand, if you see Victorian market, the Victorian market, the selling listings are not dropping. These are significantly high. And then home buyers per home ratio is around 17, whereas in WA you can see it is around 65. So that is why WA is growing.
Yeah.
We can't show all the trends at this time.
So, Zubair, let's go quickly into the, I think, let's go quickly into the market 360 overview or
Okay.
a quick snapshot. We will cover the whole tool in that, I think, next webinar because we are already over the time.
Yeah. Okay.
So,
Perfect. So we have market 360-degree overview. We from state analysis we can jump into here, and we can find balanced market, booming, declining, or rising market. And if we want to see the slicer panel, and we can put different parameters. For example, Manish bhai, we can check 750 market here, and we can put all the parameters here, and we can just close the slicer panel, and we will get those markets which are in that range. And this is getting data from throughout the Australia. And if you see these areas within the 750, we have a trend score. Trend score is basically calculated using all the scores, like we have all the demand and supply indicators plus their trends, and we incorporated and created that trend score. Higher trend score means it is a very desirable market, and there is a lot of demand pressure in this market. For example, if you see this one, the top markets, and you will identify, like all the indicators are in green. Okay, for example, check out this market. You have 7 active listings and monthly sold are 11, so it means there is less than 1 month of supply. And similarly, you have rental. You have monthly rented 19 and only 10 are active, so less than a half month of supply you have. So this indicates, like, it is a very, very tight market. But if you go on the other side, like trend score, you will find the markets which are in the downtrend or still not recovering.
Yeah, just a disclaimer, everyone, we're still building it. We're trying to improve it as we go. But yeah, we are getting data from multiple sources. Just a quick touch base, how you collect the data from a very high level, that how this data feeds comes to the PropXtrends.
So basically, we are doing all the calculations by ourselves. We are not getting data from any basically DSR or suburb finder, etc. We are getting listings data from domain and real estate, as well
Yes.
as we are getting data from Seek. We are getting data from ABS. So there are many different sources. And
Different sources. So
yeah,
how this data work is we have a data aggregators. Like we are kind of we are trying to be a data aggregator, but we source data from multiple sources and combine that and put in a presentation form. And one thing, we are developing this tool, but we are still going to be relying on many other tools there at the in the market. We are very good in DSR using from last 6 years. We're gonna keep using it, but just the few things which we were not able to cover, we're trying to cover in here, right?
yeah.
Very good thing. Just a quick glimpse on rental analysis, which I really love what we are doing here. So before we wrap it up.
Yeah, one more thing, we are refreshing this every week as well. Like, this data is getting refreshed every week, so there are not lot of delays. Rental analysis, if we go to the rental analysis, we can go to the rental analysis of any market, and you can see how many active rentals and monthly rented market and inventory and this sort of thing. And then you can see trends, and you can see the details as well. Like, for example, we have Tarnit here and we have rented listings here, and you can see how it is having, like, this is the 570 initial rent, but they have reduced it to 550, so 580 to 560. So you can identify what is happening in that market by analyzing each and every property, because we are looking at each and every property. We are not stopping our analysis on the state or suburb level. We are going to the property level. And then finally, we have advanced CMN negotiation, where we can have all the sold properties, what was the advertised price, what was the sold price, and these sort of things. The properties which are currently under offer, what was their listing price, if there is any price update. And you can see the price updates, like, these are currently in the market, and um, the agents are reducing the prices, for example, from 680 to 740, and then they are reducing prices. So we want to understand what is happening in the market based on the property level. And then these are all the current listings, and we do a lot of analysis on the agents as well, which we are not going to show, because we want to understand the psychology of agents, whether the agent is experienced or agent is a new in the market, and whether he's underquoting and he's overpricing, and whether he's
Yeah,
selling very quickly, and this sort of stuff we are doing a lot.
I've
And
seen agents advertising properties. I know when I see the agent that property is 500. I know he gonna sell for 600. Some agents do underquoting in the market there, right? So in detailed analysis, we can see what sort of price. For example, Tarnet is one of the suburbs which we generally don't recommend to the clients
yeah,
because of the supply issues. That's why we are seeing here some properties are stalling here, not renting, prices are getting reduced. On the other hand, it helps us estimating how much it's going over the asking price. For example, markets in Queensland or a Hobart or a Perth, the asking price can be like 600K, but it can go and close at 700K. So that helps us how the other properties are going in the price there. But yeah, so that was a high level. Anything you want to say, Zubair, by in the end before we wrap up here?
yes, one is the indicator, the other is the trends. I want to quickly share something. If we want to go to the suburb trends, for example, I have opened Thonli here. Like, we have drawn here the quarterly trends, but we have weekly trends as well. So from the weekly trends, I could identify, like, there is a second wave momentum in the Perth market is coming up. So listings of selling started to drop here from March, and then I bought here my property here. And when I bought here, because I could see the listings are dropping rapidly and the home buyers per home ratio was increasing significantly, so I immediately know that the second wave is coming. I bought a property in June, settled in June, and now the property is gone from 623 easily to 850, like 35% growth within 8-9 months. So it is the power of data. Like, if you understand the trends and what is happening, and you can quickly analyze, and then you can find a very good opportunities.
Thank you,
Just to
J.Y.
just to add up in the end, the showcase which has been given by Zubair about this tool going to be used internally for our PropXpert team so that we can enhance our research. At this stage, we don't have any plans to make it public. Whole idea is that whatever there are any flaws in other tools, we can try to mitigate them in our tools so that we can do an extensive research. So no plans to roll it for the public at this stage.
Yeah.
Cool.
Awesome. Thank you, J.Y. I'm very excited with this one. We use the third-party data from a very long time. It's a time to look into what we can do in this space. Yeah, so that's pretty much, Manish bro. I think let's like the PropXperts, you want to cover how we can help, and then we take his question.
I think let's open up the question answers. People are pretty much aware that we are a bias agent. We are expertise in different areas. We have people to buy properties in different trust structures. There's multiple things we can do it. But given we are over the time, let's open up for the chat room for the question answers, and let's go for there. Right.
Yes. So me and Manish details on the screen. You can call us if we miss the call. We definitely call you back, or you put an inquiry through our website, and we can just reach out to you as soon as possible. We are here to help you out whenever you want to reach out to us. But yeah, open to the questions, please.
Good. So in terms of chat room, most of the questions has been answered. There are few instances where the question has been asked outside of the context, which is still pending. We can take it later on, but let's give an opportunity for the others who want to ask a question using the audio, right?
I would like to ask a question. I have been observing this market and considering that my entry point is lower, that's around 700 max. And that's why I was interested to join this. Considering all the angles, I understand Melbourne is the only feasible market for me. But I'm worried. I'm worried because there are a lot of YouTube videos that talking about, buyers running out of Melbourne and selling their properties. But the other contrast is, a lot of tenants are queuing in for taking houses on rent, right? So I don't understand, like you're selling and coming out.
But I would say is, I don't generally listen a lot of noise, right? For example, when I jumped into Perth market back in the days, it was zero growth for 10 years, zero. I bought the property for 380. Someone bought for 380 10 years before I bought the property. And that property more than doubled in the value, right? So I would say where the bargains are, where the data is strong rather than how people are thinking about it, where I can get in 700. But in 700, there are multiple markets you can be in, not only Victoria. We have shared a lot of examples in Tasmania. You can even go in Hobart. We are buying from 600 to 700, 720. Even some Queensland markets you can go. So there's few options in 700K range. It's not just Victoria for you, right? But if you can reach out to us, we can discuss that in details. What are the options? But if you re-watch the video of what I have shared the properties, in same range we covered Tasmania, New South Wales, every state, right? So just re-watch that, and there are multiple options you have.
And Piyush, I just want to add up over here. Victoria is not a particular state for every single investor, right? So you need to go and deep dive into Victoria, whether it's gonna suit your portfolio or not, right? If I'm not wrong, we had a chat over the call or discussion over the call maybe 3-4 months ago. I did a detailed explanation whether it can suit you for Victoria or not. Looks like you are still a bit confused. I would say what Dinesh had said, to watch this video, watch this particular webinar. Multiple suburbs has been covered under 700K, and it will help you out.
Sure, thank you.
Cool. Cool. Let's go for the next one.
Before we take another question, we have already covered the time, everyone. So basically, we are here till 8 o'clock Melbourne time. If you have questions, keep asking them. But anyone want to drop, the recording will be available.
Yeah, just a quick question to Manish Bhai. Listen to him, like he kept saying, like there's like Victoria market is not for everyone. Can you please list down two of the things that people need to be aware of? Why would you say that Victoria market is not for everyone? And
Okay.
where
Yep.
would you go if your budget is 550? Would you go to Tassie? I just want the high level, the state details. Tassie,
Sure.
Queensland, or Victoria?
Yeah, the very first question when I said it's not for everyone, I did mention in this particular webinar that a lot of the people, what they feel is like, for example, Perth, they throw the dart wherever they lands it, just buy over there. Victoria is not such a state. We need to be very careful in terms of what are the suburbs which can offer properties in a given price range. The second thing is you mentioned about 550K, and if we do a reverse engineering, Victoria, as in capital, Melbourne, the suburbs will not support you to buy for under 550K in capital. If there are suburbs which gonna support you, that will be somewhere in the outer skirts, or the property might be sitting on a small piece of land like 180, 200, 250. And if you think to buy that, there's gonna be a question mark on the capital growth. So in short, under 550K, Tassie, which has been mentioned by Dinesh in the start, there are some suburbs which can fit under your budget.
And on top of that, when say you can't buy anywhere in Melbourne, if you go outskirts, if you talk about north of Melbourne, there's suburbs like 𝗿𝗲𝗽𝗆𝗆𝗆, there's bit of supply around there.
Yes.
So a bit of land supply coming in there, which harms the price growth, right? So it's not everywhere. Same with the Tarnet. One of the examples where there's bit of a supply there, right? So it's not everywhere. It's just those areas which are a bit of land locked, right, and doesn't have much supply coming up. So that should be the main focus, in my opinion.
Thank you.
And other thing is the rental yield is sitting around 4%. So that's another. So if you're cash flow poor, Melbourne might be not a good option for you, right?
If you have to choose two good suburbs in Adelaide Metro, what two suburbs would you recommend?
Your voice is a little bit breaking up. Can you
But
listen
I think I've heard the question. Are you asking
Okay.
for the Adelaide suburbs, right?
Yes.
What sort of price range you're targeting there?
So the price range I'm looking at is between 700 to 800,000.
So 700, 800. So on, like, if you talk about data and all, the parallel sort of suburbs with the small land, or like older house with bigger land, could be an option. We were buying properties in Anglevale kind of suburbs as well, right? Anglevale in the north. If you're looking at newish house, 4221, I know that it started trending above 800K now, but you can be, if you go some little older ones, you can find properties in there. Craigmore is another one which I really like in there, right? Lakeview is another one which I like there, right? So there are few suburbs in the northern side, south side. There are few there as well. But yeah, in Adelaide, you can reach out to us. We can literally discuss on what other options you have in there. But yeah, 700, 800, you can still find some properties there, right? Sandhu bro, Sandhuji, you had a hand raised from a long time. Can you please unmute and ask the question?
Hanji, Dinesh bhai. I'm looking SMSF property at the moment around under 650 mark.
650 mark, yes.
Yeah, so I've already got investment in personal name in Victoria, Traralgon, and one in Devonport bought last year.
Very good. Okay.
So is it advisable to go again in Tasmania for SMSF, or better to stay away?
See, I think better to diversify rather than going into, even though within Tasmania, you can diversify from Devonport to Launceston or Hobart. There's still some opportunities around 650 mark there, right? But that's one. But you can diversify from here. You have Victoria, you have Tasmania. We can think of going into regional New South Wales markets like that for the next one. But yeah, don't go Devonport again. Maybe diversify from Devonport to Launceston, like something like that. Or Victorian regionals. What have you already have Victoria? Where you have property in Victoria?
Victoria, I've got my PPOR in Donnybrook, and then investment in Traralgon.
So you're living like 5 minutes away from.
You live in Purcalo, right?
Yeah. So very next to me. And I give it as a bad example. It's a bad suburb for investment. So giving that, so regional Victoria markets like Ballarat, if you're okay with the cash flow, can still be good for a decent 422 properties, right? Or we can discuss like regional New South Wales like markets like Albury or Dubbo, something like that. So that would be my take on this.
Any idea about Bundaberg?
Bundaberg, Bundaberg is the problem you won't get in your budget. 650, you get very old property and which might not be suitable for SMSF and a 650,
Okay.
right? Yeah. So we bought few old but renovated in Hobart and in like there's another option you can go like for because it's SMSF you can go like markets like Gladstone or Rockhampton for 650 as well because you don't have
Okay.
their one because SMSF is a long-term thing, not a short-term because you can't get equity out anyways.
That's right.
Your decent 650-ish properties around that
So
area
that's why I'm
can be a
looking
good
something like setting for that kind of where after 10 years I'll think what to do.
yeah.
So
See, Bundaberg, you may not get much properties, but yes, Gladstone, Rockhampton, you start seeing some opportunities there,
okay.
right? Okay, Sri is the next one.
Yeah, hi.
Thank you.
I just want to understand, say in Queensland, the basically Brisbane and all have been rapidly growing in the past 2 years or so. The growth
Yes.
rate has been tremendous, but now you've showcased properties in regional Queensland, which is less than 750K. Would you envision the similar kind of growth rate in the next 2 years for those kind of properties?
No, I already mentioned that they are literally on a high side of the cycle, right? I don't see same sort of growth coming up in a short period of time. Like whenever the market growth that crazy, it saturates sometimes for like it could saturate for a year or so. When other markets will grow, this will start growing again. So if the horizon is a long term, for example, SMSF purchase, which I was talking about, it will definitely grow in say 8 to 10 years span. It will maybe double again in the value, but maybe next 1 or 2 years need to be little slow. It will be a little slow for now, right? Just because it has already seen the growth in last 2 3 years was crazy growth, right? But if the span is long term, still you can get a decent assets there at 422s around 700K mark. So I see it can be a good purchases, but not a short term growth there.
Thank you.
Right. Next question, Vijinder.
Vijinder is on mute. We can take the next one.
Is there anyone else want to ask any question? Hey, Varun. I can't hear you. Sorry, Varun.
Can you hear me?
Yes, I can hear you now. Oh, Vijinder is back. Varun, sorry. I'll take Vijinder's question first. Hey, Vijinder, yes, go with your question, please.
Yeah, just insight on if you would like to give suggestion, just comparing two sides like the regional South Australia, all the coastal side, and as if we want to compare with the Gladstone and other regional Queensland, all the Rockhampton side. Which one would you suggest, like in case of better rental and capital growth in next 3 to 5 years?
The problem with the regional New South Wales, the pocket, your Jervis Bay and all that, Wollongong, and then going to Sydney, right? So that pocket, the problem with the price points, they're not very cheap. First, that's a problem there.
Sorry to interrupt. Not regional New South Wales, regional Queensland and regional South Australia.
Oh, regional South Australia. Okay. So regional South Australia, one thing is there is not many big towns in regional South Australia. So the biggest population is in Adelaide. The next is state Mount Gambier. Right? So Mount Gambier is only 30-40,000 population. So it's not like Geelong, Ballarat, Bendigo, like in regional, regional Queensland, you have Gladstone, Rockhampton, Mackay, you have towns like 70, 80, 90,000 population. There's nothing like that in SA. So the second town is Mount Gambier, then you have this 𝗿𝗏, Port Augusta and all that, right? Where Gladstone, Rockhampton, I see they're more diverse economies.
Yeah,
Regional
okay.
Queensland. Whereas regional SA, only Mount Gambier is like more like agriculture hub and tourism and few things. Mount Gambier can be a good option. But if you talk about 𝗿𝗏, Port Augusta, you need to know your risk appetite.
Because the rental is low there.
Rental, you get around, like we are buying in 𝗿𝗏 for $450, renting for $430, $440. So you get like a 5% rental yield. Same in the Mount Gambier. What do you think about Manishwa? What sort of rental yield in Mount Gambier you can get now?
Close, it will range between 4.5 to 5% depending upon the asset. If it's an older asset, the property prices can be low, so the yield can be high. For the newish property prices are higher and will drop the rentals.
Oh, okay.
So I would say regional Queensland have little more edge as a diversified economies, right? But again, if you say bottom of the cycle markets, more like regional SA, especially not Mount Gambier is grown too much, but 𝗿𝗏 kind of markets. If you know your risk appetite.
I think he was also asking about some beach kind of thing.
So
South
beach,
Australia.
Mount Gambier doesn't have a beach, so
No,
it's
no,
𝗿𝗏.
South Australian beach like kind of thing. That's what I can recall.
So South Australian beach towns are 𝗿𝗏, Port Augusta, right?
Yeah.
Like Mount Gambier doesn't have a beach, right? 𝗿𝗏, Port Augusta are very small comparing to the regional Queensland hubs. Very small.
Okay.
Right?
True.
Yeah. Yeah.
Okay.
So bottom of cycle more 𝗿𝗏, but for a long-term growth more like regional Queensland. Right?
Okay, thank you. Because I want to buy. My loan is almost approved, and I want to buy my first IP. So I really want to contact with you guys.
Can talk to Manish or myself, and we can help you there. Awesome.
Yeah. Thanks.
Thank you, Rahul.
Can I go?
Rahul raised a hand first. We'll take his question, and your question will be the last one. Okay.
Dinesh, can I go? Like I've been interrupted in middle, like from Virgin, that when I was talking. Is that okay? Like that?
Yeah, you go ahead. Sorry.
Yeah, sorry. So yeah, thanks for providing the opportunity. So when you were going through the regional Queensland, Mackay and Rockhampton and Townsville, I understand all have been grown in more or less similar passion or little bit here and there. But for Townsville, you were saying you were not preferring as how it's different from Mackay, because insurance cost could be more or less similar based on the pocket and flood and all. Then how Townsville is not preferred and others are still?
Yeah, the problem with the Townsville, because they had a very strong project pipeline, a bit of migration happened in Townsville recently. So bit of migration. What happened was the house price is gone crazy. The rent hasn't grown much. So what happened? The yield sits around 4.5% there. 4.3, 4.4. You get into the Kirwan like 650 property, you get like $550, $560 rent now. Right? We were able to get 400 property for 500 rent in the past.
Yep.
Right? So the thing is, in Mackay yield, you can still get around 5%.
Okay.
Right? But in Townsville, it's more like a 4.5. So the cash flow can be very bad. If you're okay with the cash flow, Townsville can still be a good option.
Okay, it's more of that that yield, but in terms of growth, is still good. Like if we are able to,
it has a $3 billion purpose, $3 to $4 billion copper string project, like a bit of military projects around there. They're working on a hydrogen project, a multi-billion-dollar there. So from a project pipeline, from the fundamentals, it's still a very strong market.
Okay.
If the parameters are long term, very good market still.
Yeah. Thank you. And maybe I'll connect you, Manish, to discuss something about other things like about your package and all. Yeah.
Sounds good. No worries. Next question, please.
Dinesh, can I go ahead?
Yeah.
Dinesh and Manish, thank you very much, first of all, to share such a valuable information through these webinars. I've seen one of your recordings before as well. You guys are very different to other buyers agents because you are sharing suburbs, you're sharing your ground level research, which is very, very helpful. The question I have at the moment, which probably is there on a lot of people's minds, is the big elephant in the room about the changes to the capital gain tax and negative gearing. So someone who's got, let's say, 6, 7 properties in the portfolio, then cash flow becomes a massive issue, right? So a lot of people are now thinking to diversify into the commercial side of things. So I just wanted to, first of all, understand your point of view as to what do you think about those changes. Obviously, everything is rumored at the moment, so nothing is finalized. But in terms of your suggestion and approach for a, established portfolio, what would you recommend?
See, on first CGT, one thing is we generally like I've seen in my 6 years of career, there was a situations like Queensland land tax and stuff like that. Things comes out, bit of protest happened, and things goes back as well, right? So we don't know until that comes up. But what happened when CGT, if they reduce, for example, very good chances they will reduce from 55%, sorry, 50% discount to say 35%, 30% discount, right? So what can happen, people may hold the property for longer. When they hold the property for longer, the supply gonna shorten in that, so it even impact the price growth anyways, in my opinion, right? So the stock goes down, price goes up, right? So that's one stand. But the other thing is, when you look into the results in the end up, so when you put 50% discount or 30% discount, there might be a bit of difference in the gains you get, but it's not a showstopper, in my opinion. So people are gonna still invest. That property is a very secure asset class, so people are gonna still invest. Anything you want to share, Manish? What's your opinion on
Yes,
this?
I have a different opinion, and just to say it, whenever any changes happen, there is an impact on it, right? Whether the impact is a positive or negative. Let's consider one scenario. Stamp duty, right? There was a time when the stamp duty was being waived off first-time buyers for a particular threshold. If we talk about Victoria, under 600K, stamp duty was waived off. From memory, that was introduced in 2016. And what happened after that? Right, first-time buyers got a benefit, but the property prices around that mark, around 580, 600, 620, straight away it shooted up because there is a benefit given to first-time buyers. Now, if there is a change in the capital gain tax, let's say 50% change to 35%, the way I see is there will be an impact. The property prices will go higher. Why is that? Because every single investor who is thinking to buy it, they will consider that particular component that in future, when they have to sell it, they will not get an exemption of 50%, they will get an exemption of 35%, right? It will shoot up the property prices. So there will be an impact. Now, the question comes up when the property prices shoots up, whether investor can afford it, that depends upon the lending, then depends upon the portfolio.
Yeah.
The different aspects.
Awesome. Right. Is there anything missing we didn't cover, Vinay?
No, I think you nailed it, man. You nailed it.
Thank you.
As always.
Thank you.
Dinesh, can you do one thing? Can you go to the previous slide, previous slide?
Yes.
There was one question which has one more. There was one more question came up, what to do to improve the cash flow. This was a slide, because of the time constraint, we couldn't do it. The answers are like, it's a person who are holding multiple properties. Whenever these things comes up where there's a lot of news in the market about uncertainty, at that time, it's a good thing to change your gear, into something different. For example, there are certain properties which can increase the cash flow. Example, we can go into the short-term rental, for example, Airbnb. We can think about commercial properties. We can think about rooming houses, right? It's not a cup of tea for every investor, but there are options for the rooming house. It can increase your cash flow. Dual is another type of properties which are very common in Queensland. It can generate the cash flow. The only catch is for commercial property, rooming houses, dual properties, the entry point is not low. Nowadays, entry point is hitting to 1 mil, right? If your budget allows it, if you're chasing the higher cash flow, these type of assets can be considered.
The only thing which you can enter low is short-term rentals.
Short-term rentals.
Like I bought a property for 740, which I'm doing a Airbnb. Other property in Burnie, most likely I'll do a Airbnb on that. So just 500K property. So yeah, so that's only low price tickets, but commercial multi-tenant. I'm also doing a rooming house. So I'm trying all that. I'm maybe going big commercials in the future as well. I bought one commercial already. So there are a few ways how you can improve the cash flow. Ral bro, I think we missed your question. Last question before we wrap up. Thank you. If you want to ask if you are still around.
If nobody will ask, then I can ask something.
I got one. Okay. Yeah.
Hi. I think
there's one question which came up in the chat, and I really want to read out. The question came from Nick. The question is: do you consider the lower SEQ growth extending a little further due to the Olympics, including some regional Southwest Queensland, including Warwick or south of Toowoomba?
See those markets again. Toowoomba, that was on my list again. It's grown crazy. Toowoomba, good thing is not too far from Brisbane, so it's like 1.5 hour. Like there's a train line coming up within Toowoomba and Brisbane as well. So it's a good market to be in. But again, 750 started getting a stretch there. So very, very low chances you can get somewhere. Like you can get 311 old properties around 700K mark, but it was out of the scope. The Brisbane and Toowoomba was out of the scope just because of price tags.
I got one question, Manish, for you.
Yeah, sure.
Okay. I know we are running out of time anyway. But do you reckon for SMSF, the commercial is the way to go, or someone should keep on, playing with the residential properties?
See, commercial. Now, when we talk about commercial, within commercial, there are different assets, right? We can talk about commercial in terms of office, childcare, medical center, warehouses, shops, cafe and industrial area, right? The challenge comes up in commercial is that the entry point, if you're going with a childcare, medical center, warehouse, the entry point is a little bit higher. If we talk about office, we can buy an office under 400K, not an issue. But the growth in office will be very low. Yes, it can generate a particular rental income. So based on what you are looking for, that's one. Based on what's your budget in terms of SMSF, that's number two. Number three, in SMSF, always remember the interest rate is going to be very, very high. If for residential is high, when we take the commercial, it becomes more higher. I got commercial property in SMSF. I am paying around 7.39, something like that, right? So if it aligns with your portfolio, then we can think about it. Now, the way I always feel is that, let's say you got a super balance of 200K, you think about let's invest in commercial, and as per the deposit, the 180 is gone against you for that property. You're only left with 20K. You need to do a little bit of forward planning in the way how much employer contribution will coming up every year, which can support your purchase in case if there's a risk. Right? But if your balance is around 300K, you can still take a risk. Again, not a financial planner. I wouldn't say you go with this approach, but that's something which I have done it. I have gone with a different strategies for my purchase in commercial sector.
Okay.
Yeah. I bought one in commercial in SMSF as well, right? Like small ticket prices come either offices and stuff like that, right? That's a like if you balance out capital growth with that, then you need to see what is more important for you. Is it a rental yield you want to focus on?
Yes.
Is it a capital growth you want to focus on? Right. So residential is more like we see better growth in sometimes when you read data properly in SMSF. Awesome. Great. Thank you, everyone. Really appreciate that. And really sorry for the overtime. We always do run over the time just because the bit of content in there. Again, thank you, Zubair bhai. Very excited for the tool. And yeah, recording will be available. Please reach out if you need any help. Thank you.
Yeah. No problem. Thank you. So any questions, reach out us offline. No problem.
Thank you.
Thank you. Yes, can you turn off your recording?
Thanks, guys. Really appreciate it. It's a great presentation.
Thank you.